Should you buy real estate when you're buying a business? When I bought my wine and liquor store, I only bought the business and I signed a lease for the space that I was in. This is one avenue to go. Another avenue is to buy the location. Personally, I didn't have a choice at the time. I was buying the business from one person, but a different person owned the real estate anyway. I did know right from the start that I eventually wanted to own the building so that I could control my future and my location. So I kept asking the landlord over the years, and eventually I was able to purchase the real estate as well, which worked out well for me. There are pros and cons to buying the real estate when you buy the business or owning the real estate in general. So in my opinion, there are 5 major pros to owning the real estate or buying the real estate when you buy a business. The first one is to control your location. For me, owning a wine and liquor store is a very location dependent business. I didn't ever want a situation where somebody new came in and decided that they wanted the space for themselves, or they wanted to put in a different business in the space because they didn't like alcohol or whatever the case may be. And I actually know of a small restaurant that I used to love going to that just got kicked out by the landlord because the landlord was expanding their business. They wanted to make their own restaurant and they didn't have the need for that tenant anymore. That small restaurant moved locations and ultimately failed because their clientele didn't follow them where they went. Controlling the location of your business is a huge reason for wanting to own the real estate. It is more important for certain types of businesses, less important for others, but it still might be important to you. So that control over the real estate is a big reason for wanting to own the real estate. The second reason is lease terms and price. So besides just being kicked out, there are lease considerations. So the landlord could raise the price, they could change the terms of the lease, making you responsible for more of the maintenance or upkeep over time. In our area, we have snow plowing. Snow plowing keeps getting more and more expensive every year. The landlord could go back to tenants and start asking for more money because of the rising cost of maintenance. They could also just raise the rent price because things are going up in general. And then you're faced with tough choices as the tenant, if your business can afford it or not afford it, and then you might have to move as well. Those lease terms, prices are a second reason that I like to own the real estate with the business. The third reason is the appreciation and depreciation of the building. In real estate, there's a magic kind of formula that happens where on your taxes, you are depreciating the building. So the building, according to the IRS, loses value every year, and therefore you get to deduct that portion of the building from the income of the building. This helps offset some of your taxes. But in real life, most real estate goes up in value over time because they're not making any more land, so the land is what it is, and the cost of building keeps going up. To replace that building is going to cost more, and so therefore buildings tend to appreciate over time. So you have this double whammy of you're gaining equity over time because the building is appreciating, and you're able to save more money on your taxes because you're depreciating the expense of that building. Fourth reason for wanting to own the real estate with the business is that you might have extra income potential. So in my case, when I purchased the plaza, there are other tenants in the plaza as well. So I'm getting income from not only my own business, but also from the other tenants in the building. That adds to my overall top line revenue and helps cover the costs of the building, which just helps me in general. The added revenue from extra rent is another reason to want to control the real estate. And lastly, for the pros of owning the real estate is the equity through principal paydown. So usually when you're buying a building like that, you're taking some debt, and every month you're making a payment to a bank or to the seller or whoever's financing it. Part of that payment is interest, which is a deductible expense on your taxes. So you deduct the interest expense from your taxes, but you don't deduct that principal. However, your business is going to be paying rent. The rent is a fully deductible expense for the business, which helps you overall if you own both entities. So you're deducting that rent from the business expenses. Yes, it's revenue for the real estate entity, but then you have this pay down of the debt through that rent, which helps you gain equity over time because the debt, the principal goes down and you have more equity. So in the future, when you go to sell the building, you have the full equity, or you can always go refinance the building, pull out some of that cash in a tax-free event so you have more cash to work with for the future. So those are some of the big pros of owning the real estate. Now we'll jump into the cons of owning the real estate. One of the biggest cons of buying the real estate when you buy the business is that you're most likely going to need more capital. So even though you can finance a good percentage of the building, it will require you to put in more capital up front. So that is, if you're using all of your money or a lot of your money and you want to keep some reserves. Another con is that it adds to the complexity of the due diligence process when you're purchasing the business and the real estate. You need to look at each separately and whether they are profitable entities in and of themselves to make sure that you want both of them. If you've never purchased a business or you've never purchased real estate, that added complexity might just be too much to handle in your first deal. So think about that carefully, or make sure you have the right advisors on your team to handle that due diligence before you jump in. A third con is partly connected to that due diligence, is whether or not the real estate is a good, viable option, even if the business doesn't survive. If something happens to that business in the first couple of years for some reason, is the real estate still going to be beneficial for you to own, or is it going to become an even bigger burden because you can't replace the business that was in there with another tenant? And the last con is all of the extra responsibilities that owning the real estate brings to the table. So running a business, owning a business is one thing, comes with a lot of responsibility, comes with a lot of time and energy. Owning the real estate is another whole business that you're running. You need to keep up on the maintenance. You need to be responsible if other tenants call with HVAC problems or lighting, electrical, plumbing, whatever it is. You also have to maintain the building with landscaping and parking lots and all of that fun stuff. So it is another whole level of activity that you will be responsible for, which is one of the cons to buying the real estate with the business. So some of the reasons that you would want to buy the real estate, as I mentioned, all of those different pros. If the business you're buying is very location dependent, that's a very strong reason for wanting to buy the real estate as well. If there's better financing terms, so when you're buying the business, if the option to buy the real estate is on the table, you want to have a conversation with your banker about it, because sometimes you can use an SBA 504 loan to purchase the real estate, which will give you a better overall financing terms. They might be able to blend that with the 7A loan to push out the term of the loan a lot longer and make the monthly payments a little bit more affordable and manageable when you first buy the business. If there are extra units and you're renting out additional space to tenants, it's another really good reason for wanting to buy the real estate. You can increase your cash flow not only from the business purchase, but from the real estate purchase as well at the same time. So those are some of the reasons that you'd want to consider purchasing the real estate. On the other hand, some of the reasons you wouldn't want to consider purchasing the real estate is if that building is completely dependent or built out specifically just for your business, and it's a rocky purchase of the business in the first place. If you're buying that business and you know with 1,000% it's not going anywhere, it's in a safe industry, it's going to be good, consider the building. But if it's at all shaky of whether or not that business is going to survive long term, and that building is built out specifically for the business and only for that type of business, you might not want to consider that real estate purchase and just make sure that you sign a long-term lease before you purchase, if you are not buying the real estate. Sometimes when you're buying a business, the seller has just signed a new lease, and you can take a look at that lease during due diligence, make sure that you're in favor of all of the terms in the lease, from the rent to the CAM charges, the common area maintenance charges, to any other stipulations that are in the lease, whether there's non-compete clauses. If you're in a plaza and you're a pizzeria, you want to make sure that there's something in the lease that they can't have other food places or other pizzerias, at least, in the plaza. Those types of terms, you want to make sure that you're vetting carefully during due diligence. And even if the seller has just recently signed a newer lease and it is long-term and locked in, and you don't like certain terms, feel free to bring that up. The landlord doesn't have to change anything. They don't have to go back to the negotiating table and change anything if they don't want, but it's worth a shot, and the seller might be willing to make certain concessions if there are terms in there that you really don't like. Make sure that the terms are all favorable to you if you're not going to buy the real estate. Now, if you do go ahead and you are going to buy the real estate in addition to the business, you need to make sure you structure your ownership entities correctly. I'm not a lawyer, I'm not an accountant, so make sure you consult with your professional advisors on this, but for the most part, you're going to want to put the purchases into two separate entities. One for the business, one for the real estate. Real estate, you almost always definitely want to be holding in an LLC, not a C Corp or an S Corp, for tax reasons. The business, you may consider a corporation for other tax reasons. But you want to separate them for liability reasons. You're going to have your own insurance policies on each, so that if anything ever were to happen, you are insulating each entity liability-wise. And you want to make sure that you keep those separate entities separate. Your business is going to pay rent to your real estate company and get receipts for it, make sure it's all tracked, and keep the funds, separate bank accounts, all that stuff. So make sure that when you're buying the real estate with the business, you are structuring that properly in an organizational way. Second, as I mentioned, financing options. SBA 7A loans are typically used to purchase a business, whereas the SBA 504 loans are typically used to purchase real estate for a small business. If the business occupies more than 51% of the building, you are eligible for that 504 loan. Now, SBA financing does come with its own headaches and processes and all that stuff, but a lot of banks are going to use those programs for their own safety. So make sure you're aware of them. Make sure your bankers are aware of them. If they're not, go find a new banker so that you can make sure that you're getting the best financing advice that you can. Now, what happens a little bit further down the road? You bought the real estate with the business and you decide you don't want one or the other anymore. You can still, because you've set those up in separate entities, it's pretty straightforward to sell one or the other, or sell both at the same time to two different people, so that it's not all tied together. You might get tired of running the business at some point, but the real estate is a little bit more passive, a little bit more straightforward, so you decide to sell the business and keep the real estate. Or what some business owners do, they want to focus in on their business a little bit more. They don't want to deal with the real estate headaches anymore, so they sell the real estate and do what's called a lease back. So they sell the real estate, but in that process, they're signing a new long-term lease with the new landlord at the terms that they want. Because you control that real estate, you might take a little bit lower purchase price, but you can make sure those terms of the lease are exactly what you want with the new buyer of the real estate. Another aspect to consider is to make sure that the real estate is a good investment even without the business there. You want to look at what the area rents are, what comparable rents are in the area for your type of building, your type of location. You want to see what the business is paying currently and whether or not they can afford to pay the market rate rents based on the P&L that you see. So could you push the rents of the business and still have a profitable business to make the real estate, to maximize the real estate value? Or if you do end up selling the business, are you going to be able to get that maximum rent that you can possibly get? If you decide to move the business somewhere else or close up the business, are you going to be able to rent out that space to somebody else at a rental rate that makes sense for you to cover your expenses and cover your debt on the building? So make sure that building does cover or is a good investment in and of itself, regardless of the business, before you decide to purchase it. And then lastly, is there ever a situation where you're buying the business just to get control of the real estate? There are people that do that. Not necessarily my strategy. I do know of people that have purchased usually failing businesses or businesses that aren't super viable anymore at a very low price tag with the real estate attached to it so that they can get control of the real estate for some reason because they see potential in fixing it up, expanding it, or knocking it down and building something new, whatever the case may be. So there are situations where you might be looking at the business but realize that there's way more potential in the real estate, and therefore you don't care as much about the business financials as the real estate financials. So, in closing, I hope this video helped. I would love to hear from anybody that has purchased real estate with a business or purchased commercial real estate that houses businesses, and hear what your takes are on owning that type of real estate, whether or not you own the business or not. Please feel free to drop comments below. Look forward to seeing you again soon. Hit the subscribe button on your way out. Cheers.